Welcome to the Morningstar Market Reaction. I'm Holly Black. With me is Jelena Sokolova. She's an equity analyst at Morningstar in Amsterdam. Hello.
Hi, thanks for having me.
So you're here to talk to us about the coronavirus and its effect on global stock markets as it starts to spread across the world, and particularly its effect on the luxury goods sector. So what's been happening?
Yeah, so the luxury goods sector has been down around 4% in January versus around flat performance of MSCI index, obviously affected by the coronavirus spreading and the restrictions that both the Chinese governments but also other countries are introducing on inbound Chinese travel. The virus spreading also coincided with Chinese Lunar New Year, which is an important shopping occasion and travel occasion for the Chinese, so that this news really hit the sector.
And I suppose that is two key trends that were helping luxury goods, is the consumer spending around the holiday season and a booming tourism industry. So is that why luxury goods are being particularly hard hit?
Yes, and the exposure of luxury goods to the Chinese consumer is especially has grown over the past years. So if we compare this epidemic to SARS in early 2000, the exposure of luxury goods to Chinese consumer was only around 2%. Now it's 35%. So further, around 11% of Chinese luxury spending is actually done in mainland China, while all the other spending is done abroad, which should be impacted now by the travel restrictions. So the short-term impact can be quite severe.
So we know from previous outbreaks of viruses that the impact on the market can actually be quite short-term. What's your view on the sector for the long term? Does this change your opinion?
Yeah, I also think that the impact is mainly on the short term, that the long-term fundamentals of the sector should be sound and also driven by Chinese consumption, which is supported by increasing employment in high-wage sectors. So that does not affect my long-term view at all. That's why also my fair value estimates basically stay the same. I also think that while in the short term there is a hit, the sector can recover pretty quickly once the epidemic is getting quieter. People have delayed their spending previously, so they can come back with increased spending going forward.
Is there also an argument that while obviously this affects bricks and mortar stores, it could be an opportunity for online retailers?
Yes, absolutely. I think in the short run that could give a boost to companies such as YNAB, Yoox Net-a-Porter, which is owned by Richemont, or Farfetch, that is independent, currently trading in 4-star territory, that has some operations in China as well as brands' own online websites in China could benefit as people go less to malls, for example, or travel less, but prefer to buy online instead.
So what is your long-term outlook for the sector? Are there any stocks you particularly like?
So for the sector, I would like to mention that most of stocks are still trading at almost record high valuation. So if I look at the industry overall, the average price to forward earnings is around 26 times. So definitely not a cheap sector at the moment with this near-term risks mounting. However, I do see value in some stocks, for example, wide mode Richemont, narrow mode Swatch, narrow mode Dufry, which is a travel retailer, narrow mode Hugo Boss, as well as no mode Farfetch, the online retailer, and the no mode Pandora. All those stocks are trading currently in 4-star territory.
Jelena, thank you so much for your time.
Thank you.
And thanks for joining us.